Amazing! You've got this. Hey, did you notice that if we were to make an error early on, it would have an effect on the rest of the accounting equation for each transaction? Timothy's Twinkle Time Cleaners books would have been a mess. So, like we've mentioned before, it's really important to set things straight as soon as possible if you spot an error. One thing the accounting equation is helpful with is spotting errors. If things are not balanced between the equation, you have to have a look around to see where the error may be. Let me send you over to an expert who can fill you in on errors related to sales and some common corrections. I'll just be over here, still thinking about pie.
As we all make mistakes, right? Not anyone is perfect. Thankfully, we can all understand that we make mistakes. And, it could be a simple mistake, right? You receive $150 and you accidentally put it in as 200. Somehow you counted it wrong and you actually entered 200 instead of 150. And so now your accounts receivable is all off and things are all incorrect. And your income is overstated. So the place to look, you can look at the balance sheet, you can look at the income statement, you can look at the profit and loss. But a lot of times as bookkeepers, we need to depend on our clients to help guide and direct us when there is a mistake. And they notice that whether we made the mistake or they did. So, you can look at that and you can see that you would have made an error. So you may have done a $200 debit to cash when you entered in that money that came in, and a $200 credit to receivables instead of what was correct of 150 for both of those. So, you can correct it by finding the difference. This is simple, right? 200 minus 150 means that we have $50 that we need to account for and find that and correct that amount. So we would take that $50 debit to cash and then the $50 to a credit to accounts receivable. So, and as you're looking, you can see the change that happens on the balance sheet, on the income statement, and it all reflects what you've done as the change. So for correcting errors, you really need to make sure that you understand what you need to be crediting and debiting, because if you go in the wrong way, you can make a really big mistake, and there can be a really big error on their statements. So we want to make sure that we take our time, that there's enough thought that goes through, and even consult with somebody else. If you're not sure, don't just make that error and just think I'll fix it if I did make an error. Don't try to do it on your own. You can it's okay to ask questions. The question that's not okay is the one that you don't ask.
My friends know everything, don't they? Just as an aside, accounting software today has the fundamental accounting equation built into the application. What does that mean? It means you are in luck. That's what it means. Because while it is important to understand the equation and its impact on your financial statement, the software will reject any entry that does not follow the principles of the equation. But don't forget, luck favors the prepared. Well, that's it. You have conquered the accounting equation as it applies to sales, like a boss. Next up, we're going to apply the accounting equation to inventory. Inventory, like shoes and home decor and things. I never stop, do I? I can't help it. I'm a shopaholic on the road to recovery. Just kidding. I'm actually on the road to the outlet store. See you next time.